Good afternoon, and welcome to the Woodrow Wilson Center. My name is David Biette, and I'm the director of the Wilson Center's Canada Institute. I'd like to welcome you to today's Directors Forum with the Honorable James Flaherty, Canada's Minister of Finance. I bring the greetings of Michael Van Dusen, the Wilson Center's acting president and director, who is unable to be here today. I'd like to extend a special welcome to those of you watching Minister Flaherty's speech via webcast and television, either in real time or sometime in the future. Today's program is co-sponsored by the Center's Program on America and the Global Economy, whose director, Kent Hughes, joins me on the stage today. The Woodrow Wilson International Center for Scholars was founded in 1968 as a living memorial to the 28th President. We are a nonpartisan public policy forum, and we seek to bridge the worlds of policy and academics. The center hosts more than 50 scholars in residence at any one time, and more than 700 meetings in this building a year. We have 22 programs looking at different parts of the world and at major issues facing public policy. Among those programs is the Canada Institute, where we work to increase awareness and knowledge about Canada and U.S.-Canadian relations among policymakers and opinion leaders. We were founded in 2001, and the focus of our efforts is primarily trade, energy, environment, and border security. Before I introduce our speaker, I'd like to recognize some distinguished guests. His Excellency Gary Doer, Ambassador of Canada to the United States. His Excellency Constancio Pinto, Ambassador of Timor-Leste to the United States. Ambassador Pavlos Anastasiades, Ambassador of Cyprus to the United States. Now I am pleased to introduce to you the Dean of the G7 Finance Ministers, James M. Flaherty, Canada's Minister of Finance. Mr. Flaherty is a second-term Member of Parliament from Whitby, Oshawa, in Ontario. He serves as Canada's Minister of Finance and Minister responsible for the Greater Toronto Area. He is a Governor of the World Bank and the International Monetary Fund. As Minister of Finance, he is an ex officio member of all Cabinet committees. Minister Flaherty was recently awarded Euromoney magazine's Finance Minister of the Year Award. Euromoney credited him with enhancing Canada's reputation for sound fiscal policy while taking a full account of social justice and overseeing a strong regulatory regime that has kept the finance sector out of chaos. Bravo. Last year, in 2010, Minister Flaherty was chair of the G7 Finance Ministers and chair of the annual Commonwealth Finance Ministers meeting. Previously, for more than 10 years, he served as the Member of Provincial Parliament for Whitby Ajax in Ontario. He served as Deputy Premier and Minister of Finance, Attorney General, and Minister of Labour. He graduated from Princeton University cum laude and then graduated from Osgoode Hall Law School. He was called to the bar in Ontario with honours and practiced for more than 20 years before being elected to public office. He's married to Christina Elliott, who serves as Member of Provincial Parliament for Whitby, Oshawa, and they live in Whitby with their 19-year-old triplets. Please help me welcome Minister Flaherty.
Well, thank you, David. You read it just like we wrote it, and I appreciate that and the accuracy of all that. It is great to be here. It's an honor to be here at the Woodrow Wilson Institute. In our other official language, c'est un grand plaisir d'être ici aujourd'hui. Je veux dire quelques mots au sujet de la crise économique, l'économie canadienne et puis nos défis économiques mondiaux. Now, regrettably, on a very serious note, may I offer the condolences of our Prime Minister, of our government, of all Canadians to the family and friends of the victims of the shootings in Tucson last weekend. All Canadians wish, as I certainly do, as a legislator, a speedy recovery to Congresswoman Gabrielle Giffords. I am pleased to be here at this Center for Scholarship, and the fact that Canada is a focus here is great news for us in our work with the United States and internationally. I'll take a moment to acknowledge my fellow Canadian, astronaut Julie Payette, who is here in the audience today. Julie has accepted an 8-month appointment as a public policy scholar here, joining the ranks of notable Canadians such as Ralph Klein, Benoit Pelletier, Joe Clark, and as he takes pains to remind me regularly, my eldest brother, Professor David Flaherty, who was here in the early 1990s as an expert in privacy and American history. I would be remiss if I did not acknowledge a connection too, of course, being in the class of, I'm getting old, the class of 70 at Princeton. And as you know, Woodrow Wilson was first 25 years at Princeton as an undergraduate, as a professor, and as the president of Princeton University before becoming president of the United States. I can assure you I was an undergraduate. I was never a professor. I was certainly never president of Princeton, but I think I played a lot more hockey than Woodrow Wilson when he was there. I'll try not to go on too long, too. There's a lot to talk about, but I'll be mindful of the caution that I was given by one of my Irish politician friends who told me the story of the Irish politician who got up and was going on in a hall like this at some length and going on, and some people started going out that door over there, and some started going out the door over here, and finally there was just one fellow sitting right in front of him, and he stopped his speech and he said to the fellow, he said, "I just want to thank you, sir, for having the courtesy to hear me out." And the fellow stood up and said, "Don't thank me, I'm the next speaker." So I hope you'll stay with me for a while. I've got to talk a bit about where we are in some of the domestic things, but also internationally. Here at the Canada Institute, the goal, as I understand it, is to explore one of America's most important bilateral relationships and the world's largest trading relationship, one that gets far less attention in Washington than it deserves, unquote. Now that may have been true when the Institute was founded, but today some in Washington certainly are paying more attention to Canada. Just last Wednesday, the Washington Times said, "Talented Canadians have long regarded the United States as the land of opportunity." That's true. "It may not be long before Americans see our northern neighbor as the land of the future. We could learn a lot from them." Well, we've learned a lot from each other over the years, and we've certainly learned a lot from each other during the course of the economic crisis these past few years. And let me offer some context for that. If I go back to October 2008 here in Washington, and it was that day, it was a Friday, that the G7 finance ministers and central bank governors met in the cash room of the Treasury. This was at the, looking back, but certainly we felt it then, at the height of the crisis. This was at the point where Lehman Brothers had failed in the spring. Lehman Brothers had failed the month before in September 2008. Bear Stearns had failed in the spring. We had frozen credit markets. We had British banks that had failed. We had German regional banks that had failed. There was some question about whether the markets would open on the Monday, and as I say, this was Friday afternoon. Secretary Paulson, Hank Paulson, started the meeting of the finance ministers and central bank governors by saying, we're in a lot of trouble. And I think we all knew that. There was a response by the Europeans that was fairly aggressive with respect to what had happened with the Lehman Brothers, and the view that some of them had, and some of the bankers had certainly from Europe, that Lehman Brothers ought not to have been allowed to fail. And they handed out a one-page sheet, I remember this, with just showing what had happened to credit spreads since the failure of Lehman Brothers. So there was an unusual discussion for central bankers and finance ministers there that was fairly acrimonious. We did intervene and pointed out to some of the Europeans that they had banks that had ratios of 30 to 1 and 35 to 1 and 40 to 1, that this wasn't simply a situation that applied to some United States financial institutions. The conversation became more reasonable over time, a little less acrimonious. We have the practice in international fora of public servants before the meetings prepare communiques. They're usually quite dense, long things with small print, and no one is really supposed to read them, so they serve their purpose. This time, we acted differently. We agreed around the room that we would tear up the communique, which we did, that we needed a one-page document, that we needed something that would help restore confidence, and came up with a 5 5-point plan on one piece of paper, which the G7 people around the table all endorsed. And fundamentally, the conclusion was that we would not allow any more systemically important financial institutions to fail. This was an important meeting in the sense that it set the tone for the weekend and, in fact, led to the G20 becoming the primary forum for the discussion of global economic policy. That was on Friday afternoon. On Saturday morning, the G7 finance ministers met with President Bush in the Roosevelt Room. He went out in the Rose Garden, endorsed the 5-point plan. The IMFC met that morning. The IMFC endorsed the plan. In the afternoon, there were several meetings, but one of them was the Council of the Finance Ministers of the Americas, all the finance ministers from North America, South America, and Central America, who again endorsed the 5-point plan. And then in the evening on the Saturday, the G20 finance ministers met. President Bush attended again at that meeting, and the G20 finance ministers endorsed the plan, which led to the first summit, the first leaders' summit of the G20 in November 2008 here in Washington. All of this was unusual in the Canadian context because we were in the midst of a general election, which created awkwardness. Governments aren't supposed to make major decisions in our system during the course of an election campaign. But the election, as I say, these meetings started on October 10th. The election was the following Tuesday, October 14th. We had to make some decisions with respect to the Canadian liquidity in the Canadian banking system, which we did. We decided to purchase some insured mortgages that the federal government guarantees in any event to provide more liquidity to our banking system and to guarantee the wholesale debt of our banks, which we did during the course of the election campaign. But we did not have to put taxpayers' money into our financial institutions in Canada. And in fact, on the mortgage insurance program, as the banks came back around in 2009, we made money on the program for the taxpayers. The next important meeting, by way of context, was the November 2008 summit here in Washington, where the primary resolution was that the countries around the table agreed that we would stimulate our economies by 4% of GDP over the course of 2 years. And we did that in Canada, and we had the support of the G20, which I think, in fairness, helped convince Canadians that it was necessary, that it was the right thing to do as part of the global response. Let me turn for a few moments specifically to Canada. No one saw the recession coming in the last quarter of 2008. We did anticipate some turbulence, though, early on when we were first elected 5 years ago in January 2006. And the concern was the amount of debt and deficit, particularly here in the United States, because the United States is our major trading partner, 75% of our trade or so here. And we were concerned with the sustainability of the fiscal situation here. So what does a smaller country do in order to prepare for what is likely to be some turbulence down the road? Who knows quite when? Well, we balanced our budget, certainly. We ran surpluses. We paid down public debt. And we did that for 3 years leading up to the recession that started in the last quarter of 2008. We were concerned that preparation helped us. In May 2006, in our first budget, for example, I referred to one of the major risks being a sudden correction in U.S. house prices. As you know, that didn't happen until later on in 2007. Our government also released a long-term economic plan back then in 2006 to protect and grow our economy, really based on maintaining balanced budgets, making sure that with surpluses that we have, that we pay down public debt, and to keep our debt to GDP ratio well below our G7 counterparts. In October 2007, we did more. We decided that to improve our competitiveness and to spur economic growth in the fall of 2007, that we would make some dramatic reductions to personal and business taxes, as I say, to spur growth. This was a longer-term program. I'll come back to it in a minute, but it's starting in the crisis. I say this not to say, how wonderful Canada is. I just say this to draw some some points about the reasons for that relative stability. First of all, prudent mortgage lending standards by our financial institutions. The fact that our financial institutions are primarily large retail-based financial institutions through a branch system across the country. They know their customers locally. They don't sell the mortgages for the most part. They hold most of the residential mortgages that they give out. We have a sound supervisory system. I know people like to talk about regulation a lot. Most of the financial institutions that failed were regulated. Most of them were not properly supervised, I'd suggest, and that's the key, that we have effective supervision in Canada through the Office of the Superintendent of Financial Institutions. The Canadian Bankers Association last survey on residential mortgages in arrears in Canada, which was in October, showed arrears of 0.4% as of October 2010. This is unchanged compared to October 2009, a year before. We also have recourse mortgages in Canada, so that a person has a continuing obligation financially, even if they walk away from their mortgage indebtedness on their residence. And we do not have mortgage interest deductibility on our income taxes. We do have tax-free capital gains on the sale of a principal residence. A few words about business taxes. I mentioned that earlier. This was an important policy decision back in 2007, and a decision that was made to help create jobs. We know that reducing business taxes is the fastest way to create jobs because it reflects very quickly in hiring and economic activity. When we took office in February 2006, the basic corporate tax rate federally in Canada was a little bit over 22% with surcharges. That was, as I say, 5 years ago. As of January 1st this year, a couple of weeks ago, it is now 16.5%. As of January 1st next year, it will be 15%. That's going from a little bit over 22 to 15% over the course of 6 years. This is already legislated, despite the fact we're a minority government. It passed back in 2007, 2008. So if someone wants to change that, then they're going to have to raise taxes in Canada. As a result of these reductions and other tax changes, we now have an overall tax rate on new business investment that is substantially lower than any other country in the G7. Now, we are a federation. We need the cooperation of the provinces because the provinces have the power to tax businesses, just as the federal government does. So we urged them back in 2007 to join us in this venture to get their business tax rate down, which are there are various rates, but get it down to 10% by 2012, 2013. Most of them have taken up that challenge and will be there by 2012, 2013. What difference does it make? It means that we will have a Canadian brand, a Canadian number of a base business tax rate of 25% combined federal, provincial, as of 2012, 2013. So we've come a long way from where we were 20 years or so ago. Over the holidays, I was interested to see an editorial in the Wall Street Journal. It said, 22 years ago, we wrote an editorial, North to Argentina, warning Canada that economic prosperity isn't a birthright, but requires sound policies like free trade. Nowadays, that's a lecture Canada could credibly deliver to Washington on business taxes. That's not me, that's the Wall Street Journal. So. We do believe in free trade. We believe in open markets. We act on that in the last budget that we did a year ago. We permanently eliminated tariffs on a broad range of machinery and equipment. Tariffs on manufacturing inputs eliminated by January 1st, 2015. This will make Canada the first tariff-free zone for industrial manufacturers in the entire G20. The bond market has been good to us. After not doing this for 10 years, Canada went back to the global bond market last year. We did an issue in U.S. dollars and a second one in euros, both of which were oversubscribed by the power of 8 or so. A few words about our financial services industry. The World Economic Forum for 3 years now has rated our banking system the soundest in the world. As I say, we did not have to bail out our banks. I give a lot of the credit for this to a strong supervisory regime in Canada, and a structure that we have which has the major players sitting around the table together. So my Department of Finance with my Deputy Minister, the Office of the Superintendent of Financial Institutions, Julie Dixon, who's the primary regulator of the financial institutions, the central bank, of course, the Bank of Canada, the governor, the Canada Deposit Insurance Corporation, and we have a consumer agency, the Financial Consumer Agency of Canada, all of whom are responsible together for keeping an eye on the macroeconomic situation, and it has put us in a position where we are well positioned to transition to the new Basel III standards on capital and leverage for our financial institutions, and we will do that well ahead of the deadline in Canada. If I can turn a bit to the G20 and the G7. Canada chaired the G7 last year. We co-chaired the G20 with Korea. As you know, there was a G20 summit leaders meeting in Toronto in June. That was an important meeting. The Prime Minister led the discussions and the negotiations that led to a three-pronged approach to fiscal consolidation. First of all, that advanced economies committed to meet ambitious targets, halving their public deficits, cutting their public deficits in half by 2013, and also stabilizing or reducing their debt-to-GDP ratios by 2016, and agreed that this consolidation should proceed in a growth-friendly way. We agreed also, the leaders agreed, that countries with large current account surpluses agreed to undertake measures to raise domestic demand and reduce precautionary savings. And as part of this, emerging surplus economies agreed to undertake reforms to enhance exchange rate flexibility. All members of the G20 committed to pursue structural reforms that would boost long-term growth. These are important global commitments. They are ambitious targets, but they were agreed to in Toronto. So there are some positive signs now in the advanced economies, particularly of late. Demand in many advanced economies is expected, though, to be modest for some time. Emerging economies are experiencing a significantly stronger recovery, but as you know, they're facing rising inflation and the risk of asset price bubbles re-emerging. So I think the general view, and certainly is our view, that rebalancing needs to occur. Governments in advanced economies must return to living within their means. For advanced economies, one key response to this challenge is to set out credible and clearly communicated plans for restoring fiscal balance and reducing debt-to-GDP ratios. Recent and current developments in Europe pose enormous challenges to sound fiscal management, including higher interest rates and borrowing costs, deteriorating consumer and investor confidence, and the potential for debilitating financial crises. Now, fiscal sustainability, fiscal consolidation in advanced economies is not sufficient by itself. It is only one component of the international policy coordination needed to sustain strong, sustainable, and balanced growth in the future. Globally, imbalances have begun to widen again, and low interest rates across advanced economies have sparked a new search for yield, leading to increased volatile capital flows into emerging economies and upward pressure on their exchange rates. Several countries have responded through unilateral intervention and regulations to restrict capital inflows. And these uncoordinated measures heighten the risk of countries introducing retaliatory trade measures and underscore the need for cooperation. They have direct impacts on other countries. Canada, for instance, has borne a disproportionate share of the adjustment in recent months through the appreciation of the Canadian dollar. From the G20 Seoul Summit, we now have agreement from G20 leaders on a roadmap that will take over the next year, that we will take over the next year to identify and reduce unsustainable external balances. Large current account balances will be assessed against a set of indicative guidelines, with countries committing to pursue a range of measures to reduce these imbalances. Canada, together with India, has been tasked with leading this work at the G20 over the next 12 months, and work is in progress, although it will not happen overnight. But what is essential here is that these discussions are being coordinated multilaterally with all the major players at the table, rather than, quite frankly, the dangerous alternative of nations going their own way. Now, I can tell from your faces I've gone on almost as long as it seems, and I thank you for staying in the hall. I appreciate that. Woodrow Wilson once said, life does not consist in thinking, it consists in acting. Well, we need to do both. If the world's developed and developing nations can continue to work together, just as they did when the global recession first hit us all so hard late in 2008, I firmly believe we can go a long way toward ensuring a solid and sustained global recovery. In Canada, now I've said a lot of nice things about Canada, about our economic performance. We have some significant challenges in order to secure our economic recovery. We have a relatively high Canadian dollar, which is a reality. We are reducing business taxes, which helps alleviate that impact. We are eliminating tariffs on machinery and equipment, which I mentioned before. We have ongoing fiscal challenges in some of our provinces. In particular, we are encouraging, I've certainly been encouraging my provincial colleagues. I used to be Minister of Finance in Ontario, and I've been encouraging them to balance their budgets as soon as possible. And we've committed to keeping our federal transfers. We transfer substantial amounts of money every year from the federal government to the provinces. We've committed to keeping our transfers at the levels they're at through 2013. 2014. So we will not balance our budget federally on the backs of the provinces and territories, which happened back in the 1990s. We're also concerned with household debt. Like the United States, our interest rates are nearly rock bottom. These conditions have made it logical for Canadians to borrow money, and we are, cautioning Canadians to use common sense that interest rates will not stay low forever. They're going to go up, and will you be able to handle your debt obligations when you have higher interest rates? Sometimes we've done more than talk about it. Twice, I've tightened the rules on residential insured mortgages in Canada to shorten amortization periods and larger down payments so that we can make sure that we maintain a solid, stable residential housing market. We also have challenges with respect to productivity and innovation. So a final word, cooperation is vital. We did have the honor last year to chair the G7 and co-chair the G20. Everyone's agreed that the G20 is the premier economic forum. There was some question, in fact, last year about the role of the G7. This year France is doing both chairing both the G7 and the G20. And I'm confident, actually, the G7 part of it will continue. We did something last year that was unusual. I invited my colleagues, the central bankers, the ministers of finance, Secretary Geithner, Ben Bernanke, to come with me in February to Iqaluit, Nunavut in the Canadian Arctic, which is a relatively balmy -15, -20 Celsius. Back then, and we did. We went up there for a weekend, no ties, and the whole idea was to get back to the idea of the G7 originally, which was a fireside chat idea, not a big communique, not a lot of formality, which we did, and we got rid of the communique as well. That chat that we had around the fire in Iqaluit was very important last February, because following that, we had the crisis with respect to Greece, and the continuing issues in Europe with respect to some other countries, including, of course, Ireland. But it helped facilitate that cooperative attitude and that ease of communication that central bank governors and ministers of finance need to have. I thank you for your attention. I think that the work that the G20 and the G7 has been doing has served us well over the past few years, and I look forward to further cooperative efforts this year to ensure that we move away from this recessionary period and these credit challenges firmly and finally. I look forward to answering any questions you have.
Thank you, Minister. You covered a great deal of ground in a very insightful way, and I can see that there are either everyone is set to be the next speaker, or you certainly kept the audience riveted on what you had to say, and no doubt your calm demeanor reflected the experience of raising triplets, which must have made the financial crisis seem rather minor. We've got very little time for questions. I wanted to exercise the prerogative of the co-chair here and take off on your reminding us that Mr. Sarkozy is chairing both the G7 and the G20. He has expressed an interest in discovering or developing a new international currency. I wonder if there's some Canadian thoughts on that front.
Yes. Yes, there are some thoughts. Yeah, I think the priority really is to deal with the potential dangers that we have in Europe, and not with respect to currencies. The American dollar is serving the purpose.
That's encouraging, and we, of course, Americans are always pleased to learn about the effectiveness of a fireside chat, which takes us back to an earlier period. We have probably time for just one or two questions. Maybe if you could pose the questions briefly and give the minister a chance. There's a gentleman right there. Sir.
Hi, I'm Earl Fry from BYU. Welcome to Washington, where we've balanced our budget 5 times since 1961. And where our gross debt this year has just surpassed our gross debt as a percentage of GDP in 1944, when we were involved in World War II. I know you're not here to preach to us, but what are some of the best practices maybe we can look at in Canada that might help us to overcome some of our difficulties right now?
Let's take just one or two more questions and then let the minister respond to all of them. The gentleman here in the...
Don Phillips, consultant. You mentioned, I believe, that you, in conjunction or working with India, were developing some measures or a list of measures that could be used to address imbalances. Could you give us a sense of what they would be?
Why don't we turn to you, Minister, and let you answer those two questions? Then I think that will have to be it.
Well, dealing with the latter part yet, that work is just underway, but I think the goal is to make sure that we have a willingness among the G20 partners to seek to address imbalances, including artificially pegged currency imbalances. And that needs to be addressed, and it needs to be influenced by the guidelines that were talked about in Korea in November at the Leaders' Summit. So that's what we're trying to put some meat on those bones as we work together with India. On best practices for budgeting, I don't want to be presumptuous. It's really not all that. I had a high school student in Canada write to me, like she's in the model parliament and she's the Minister of Finance. She says, "How do you go about this budgeting business?" And I said, "Well, first of all, you got to decide what your priorities are. What's most important? And some things one has to spend money on. That we have a health care system, for example, that we transfer a substantial amount of money from the federal government to the provinces who actually administer the public health care system. There's private parts to the system as well, but that's fundamental spending that has to be done. We have to fund our armed forces and make sure they're properly equipped, and we have other priorities. But you have to decide, okay, what are the priorities? Fund the priorities. Don't fund anything more than you have to fund, and stay away from the non-priorities. And there's always political pressure. I get it from my colleagues certainly about some project, some idea, something that's usually a lovely idea and it's a good project or it's a good program, it's a good initiative, but you have to learn to say no. We had a Christmas reception before the holidays in Parliament Hill, and my staff gave me a Christmas present, which was a newly designed rubber stamp which simply says no. And I've been using it. And finance ministers need to have, in Western economies, in advanced economies, need to have a stamp like that handy these years.
Thank you, Minister. Let me turn the program back to David.
Well, Mr. Flaherty, I would like to thank you for coming to the Wilson Center on what Washington considers a snowy day. Glad you made it. I'm glad you folks made it. And this will be posted on our website and other materials as well. Enjoy your stay in Washington and your discussions. And we do look at Canada as a good example of what we ought to do and many, many things. Thank you very much. I'm going to leave with the ambassador, and then y'all can leave on your own. Thank you very much.
You all remain seated until the ambassador leaves, and please join me in a round of applause for an outstanding presentation. Thanks. It was really a pleasure. Love to have